Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. I wanted to look ahead to the forthcoming week from an earnings perspective for the week starting Monday, the 12th of February. I'm going to give you an overview of what stocks we're going to see reporting, some of the main stocks, also an overview of what's happening in terms of US earnings season thus far. And then finally, looking at three major stocks to look out for where we could see some volatility. We've got some interesting charts to trade around. Firstly, let's jump into that wider picture in terms of what to look out for in the week ahead. In terms of some of the names we're going to be looking out for, Monday's always a relatively quiet Monday and Friday. This time around, we've got a few names: Arista Networks, Cadence Designs, Waste Management. But things really get going on Tuesday. We've got Airbnb, Moody's, Marriott International, Restaurant Brands, Coca-Cola, and Shopify. On Wednesday, Cisco Systems head up a day that also sees CME Group, Occidental Petroleum, Kraft Heinz, and Baidu. And then Thursday, we see Applied Materials, Deere & Company, the Southern Company, DoorDash, and Coinbase. Like I said, Friday, generally relatively quiet on the earnings front, and that is something that's playing out once again. In terms of exactly where we stand thus far, I'm just going to put this on full screen so you can see it a little bit better. This is an overview of earnings season thus far. We can see on the top left that 64% of the S&P 500 has reported, and you can see a breakdown in terms of where we've seen outperformance and underperformance. Generally, earnings have been beat, and this really points towards an idea that businesses have been guiding the expectations relatively lower to be able to try and beat them. The revenue side of things, that has been a lot more mixed, in particular utilities and energy underperforming on that front. Consumer non-cyclicals also underperforming, particular strength in terms of the healthcare sector there, with 93% of those reporting having beat on revenues and 85% having beat on earnings. So, yeah, this is a view of the wider spectrum. The revenue side of things, less convincing, but earnings from a wider perspective, 81% of the S&P 500 companies that have reported thus far have managed to beat on earnings. Let's get into the first stock that we're looking out for, and that is Airbnb. Of course, this company saw a massive bumper beat last time around, 663 on the earnings figure, and that was well above the 211 expected. In terms of this time around, we're looking for 0.65 or 65 cents, and if you compare it to the prior figure a year earlier, that came in at 0.48. So we're looking for upside, and if you look at sort of prior trends in terms of the surprise, generally we see them outperform on this metric. And generally, if you look at revenues, it's a similar kind of situation. We just don't necessarily see it by the same degree, but we generally see outperformance on both metrics. So Airbnb relatively good at beating market expectations. The caveat is that generally you'll see stocks sort of seeing oversized losses when they underperform, but when we see them outperforming expectations, generally we're seeing these stocks actually not gain to the same degree. A little bit of a pessimistic outlook, but maybe it's also the fact that markets are really looking at earnings reports as something that businesses really try to shape up in a way where they can outperform expectations. So yeah, in terms of that revenues figure, we're expecting 216. That's in comparison to the previous fourth quarter figure of 190. So expecting to see strong growth on a year-on-year basis. And from the sort of charting perspective, let's look at whether this provides the basis for further upside. Now, this is the weekly time frame, and we can see that by and large, we have been regaining ground since the lows that we had back in the sort of turn of 2022 into 2023. From the monthly time frame, it probably gives us even greater clarity. You can see these nice pullbacks. You know, if I was to measure them from a fib perspective, you're looking at, say, a 61.8 move here, and then an even deeper one. Is that a 76.4 fib? Let's just grab that. There we go. So 76.4 on this one. So yeah, we've come into nice deep retracements. And so the rally that we've been seeing over the course of the last 4 months looks very much like the moves that we've seen previously, where you push into new levels, retrace over a few months, and then push upwards once again. We're halfway, well, we're some way into this current move. We haven't broken through that prior peak that we have here at 155. But that does look likely if you're looking at the trend that has been playing out of late. So this sort of rebuilding process off the back of that significant sell-off of the course that we saw back in 2022. This looks to continue apace unless we see a breakdown through support. The daily time frame shows us exactly the same kind of thing. So if you're looking from a more granular level, you sort of see these rallies and then the multi-legged pullback into that deep retracement, the rally and then the multi-leg pullback. We're in that rally stage at the moment. If we start breaking through, say, the 140, 130, and in particular the 130.84, then it looks a bit more worrisome. But until that happens, given the fact that this stock generally beats, as we've seen, I think there's a good chance that we continue the trend that has been playing out over recent months and we push up through that 155 to look for that next leg higher. I don't necessarily think that we're ready for that pullback phase quite yet if you're looking at that wider trend to continue to play out. Then let's look at the next stock. That is Shopify. Shopify, of course, enjoyed a massive boom in the past. If you're looking at sort of the COVID period, everyone was buying things online. Shopify were trying to essentially become the hub for businesses to maintain or enact their sales within. And certainly, if you look at sales over the course of last year, they have really ramped up in terms of earnings, but the sort of revenue side of things, maybe a little bit less so. If you look at that earnings figure, 0.31 expected. So growth once again on the Q3 figure, and that is to be expected given the fact that, of course, the fourth quarter is generally a really good time for sales. Because of the Christmas period, you have the back end of the sales from the Black Friday period as well. So that generally points towards strength in December. That is really sort of hammering home recently. You know, we can see this move into significant profitability on that EPS front has really been building this time around. If you look at the Q1 figure from the previous occasion, that was at 0.01, right? So 1 cent earnings per share for Q1 2023. This time around, we're looking at 0.22. So really, we're sort of seeing a shift up in terms of profitability over the course of the coming year expected. And Q4 hopefully will close things out very well for this company. In terms of whether it outperforms or underperforms, we have seen the last 5 occasions with very strong outperformance on the earnings front. And we've seen also outperformance on the revenue front, looking for a significant boost this time around above the 2 billion mark. And so, you know, things again look relatively strong for Shopify. And in terms of the share price, if we look at the chart, we can see that the chart is following in that path. The weekly time frame shows you that we're trying to regain those losses through that occurred around the COVID period. And that big sell-off that we've that sell-off that we saw, to some will see this as a big buying opportunity because yes, maybe markets were getting a little bit carried away at that time, but we're still well away from that prior high, and we have got a nice solid uptrend in play. That 75.82 support level that was established at the beginning of February provides a low that if we break would point towards a wider retracement. We have seen a significant rally in the week leading up to these earnings, so there is a good chance that perhaps we see a little bit of sort of steam taken out of this stock soon enough. But as long as we don't break that 75.82 mark, I think there's a good chance that we do continue to push higher for a stock that looks like it's really starting to snowball in terms of profitability. And the past 5 occasions have seen outperformance on both earnings and revenues perspective. So again, things I think look relatively positive here for Shopify. And unless we start breaking through these key swing lows, 75.82s, the 70.61s, then the trend is your friend. And the trend remains bullish for the time being for Shopify. And then finally, I wanted to bring a crypto theme for the week. Coinbase, of course, coming into play at a time when we're seeing cryptocurrencies really starting to gather momentum. We've seen certainly towards the back end of this week leading into these earnings, the likes of Bitcoin and some of the altcoins start to pick up pace, and Ethereum as well. So coming into the halving event, which is now around about 2 months away, I think there's a good chance that we do see cryptocurrencies really coming back into the fold once again. And so that increases the size of the transactions being undertaken for Coinbase. It's likely to grow their user base as well as people come back into the fold and start to hear more about this halving event and the potential for gains around about that as well. So whilst we have seen this company with relatively flat revenues, if you look at the bottom half of this chart, we've seen revenues not really moving anywhere since that sort of Q1 2022 figure of 117 billion, so 1.17 billion. We've seen those revenues sub $1 billion for some time yet. So are we starting to, or are we going to start to see this turn a corner as we see the interest coming back into the market? Most notably, if you look at the top section here, the earnings per share are expected to move back into profitability once again. In terms of the prior figure, minus 0.01, so teetering on it. So we had been looking to potentially do that, but we're expected to see a very small profit this time around in terms of earnings per share, 0.04, so 4 cents. Nonetheless, if we see cryptocurrencies moving towards the upside, then, like I said, this could really have significant implications for their profitability and the outlook. The outlook from the CEO is going to be really key as we look out for these earnings. From a charting perspective, let's just end things here on the chart here. And you can see this looks like a big basing pattern that we've seen taking shape over recent years. And ultimately, if you trade cryptocurrencies, you'll know it's a very cyclical market. So as we see cryptocurrencies sell off, so you likely see the likes of the miners sell off, the likes of Coinbase selling off. Let's just put the Bitcoin chart on top of this. You can see here Bitcoin really tracking it very closely in the past. More recently, we have seen Bitcoin start to take off in a more meaningful manner. And whilst we've seen this pullback coming into play here for Coinbase, we've seen more like consolidation and then a push into new highs for Bitcoin. So arguably, you could look at this as a potential sort of catch-up play as we see the likes of Coinbase and the CEO being able to come out and say, hey, we're likely to move into profitability, or we have moved back into profitability, and we're expecting to see margins improve. We're expecting to see transaction volumes improve as we see, or if we see, cryptocurrency valuations move towards the upside. So this is going to be a really interesting chart to watch out for as we move forward. In terms of the near-term price action, we've seen a breakup through this descending trend line. And so we're looking for a move through 136.89 to confirm, in my mind, a breakout from this sell-off that we've been seeing at the beginning of this year and a move into a more positive mindset for Coinbase traders.